I'm going to show you how to do the tabular analysis in Excel. I'm a big proponent of using Excel whenever possible in order to make your life easier. The more familiar you get with Excel, the better off you will be in all business. So we're going to do problem BE 3.2. Problem BE 3.2 says, during 2017, Mannion Corp. Entered into the following transactions. They borrowed $60,000 by issuing bonds. They paid $9,000 in cash dividends. They received $13,000 cash from a previously billed customer for services performed. They purchased supplies on account for $3,100. They wanted us to use the tabular analysis to show the effect of each transaction on the accounting equation. Then they want you to put an explanation for the changes to stockholders' equity in the right-hand margin. For retained earnings, use separate columns for revenues, expenses, and dividends if necessary, and they refer you back to illustration 3.3 on page 99 as a model to work this problem. So the first thing you do, or I would do, is I would just start with the lower accounts. So we have cash. One of the things about Excel is that if you try to use the plus, the minus, the equals in a cell, it will create a weird error for you sometimes. So in order to show the plus, what I do is I do an underscore, the plus, and an underscore. Just so that it shows up right for me when I'm looking at it really quickly. So you see the word accounts receivable, a little too big. So if you right click and you go to format cells, my computer is very slow, so you'll have to forgive me. And you go to alignment and say wrap text. Then it opens it up a little bit more. Then the next one would be a plus. And then supplies. Same thing with the underscore and the equal sign. And then I have accounts payable. Format the cells, wrap the text. Underscore again, plus, and then it's bonds payable. Format the cells, wrap the text. Common stock. Same thing with the underscore and the plus sign. Retained earnings. To make it look exactly like the one above, what I would do is that I would highlight these cells that are above my assets. Then I would do a merge and center. And I would say assets. Equals. I would merge and center over my liabilities. Underscore plus underscore. And then I would merge and center and put the title stockholders' equity over these accounts. Now, for the sake of pretty, I'm going to go ahead and come in and I'm going to bold these. I will also format my cells to provide a border on the underside. I'm going to then come in and give these cells a border, not quite as thick, on the underside of those. This just gives it a really easy to see visual appeal. When you're working with Excel or you're working with Word or you're working with anything and you're creating something, you always want to think about your audience and whether or not they're actually going to be able to follow things, and creating the borders and putting in that disruption allows the eye to process this a little bit better. Now I'm going to take this to 100%. I'll be addressing these particular transactions. So let's start with the first one. In transaction analysis, what we're trying to determine is, was there an economic change? Was there a change in the amount of the assets, the liabilities, or the stockholders' equity? The first one, it says we borrowed $60,000 by issuing bonds. Now, if you go back to your little cheat sheet in the front of your book, it talks about account classification and presentation. So we know we borrowed something. If we borrowed something, we're creating a liability. So we know we've increased the liability, and inherently when we borrow, we're borrowing money, we're borrowing cash. So there's an increase of $60,000 in cash. And because the accounting equation has to stay in balance, we know we created a liability. We have $60,000 in bonds payable. I'm just going to real quick format all of these to go to dollars for us to make that easier for you to read. Remember what I said about keep your audience in mind. Although I can look at that and see 60,000, I know I'm good. Does not necessarily mean that your audience is going to be able to look at it as easily. Now, there's a couple of tricks you can do here, and I will show them to you. So to make sure you're staying in balance. So let's put in a formula. You start that with an equals sign. And because I'm going to do multiple things here, so I'm going to take the sum of my assets, and then I'm going to say minus the sum of my accounts payable, my bonds payable, my common stock, and my retained earnings. Oh, sorry about that. I apparently am missing a couple of parentheses there, but Excel fixed it for me. So you see how it says 0. That means that both sides equal the same. I want this. And what I would do is I would set this up as my control column. If it does not say 0, then I know I'm not in balance in that line. So we've addressed number 1, the borrowing of $60,000 by issuing bonds. Let's look at number 2. So this is we paid $9,000 in cash dividends to the stockholders. So if we paid out cash, then we reduced our cash by $9,000. And dividends, as you will recall, is an element of retained earnings. It is one of the accounts that affect retained earnings. When I carry my control column down, I'm still in balance. I'm at 0. Let's look at number 3. Oh, and remember it said that it wanted you to put notes for retained earnings. So you would just put paid dividends or paid DIV. So number 3 says received $13,000 in cash from a previously billed customer for services performed. So we know our cash increased $13,000. The next element says that it is from a previously billed customer for services performed. So those services were performed. We created a bill for them. When we bill a customer for services or goods, we create what's called an accounts receivable. So this $13,000 is somewhere in the accounts receivable account at this current date. They no longer owe us $13,000. So we would reduce our accounts receivable by $13,000. Carry my control feature down. I'm still at 0. Now, number 4 talks about the purchase of supplies on account for $3,100. So remember, when you hear on account, you're going to think either accounts receivable or accounts payable. Now, because it is something that we received and we owe money on, that's an accounts payable. If we billed someone and they owe us money, that's an accounts receivable. So we have the on account. So we've increased our obligations by $3,100 in the purchase of $3,100 worth of supplies. So here is just a very basic walkthrough on how you would do this in a tabular format. You can do this with anything. Now remember, if you were doing the extended equation, then you would have common stock plus, and here we would have, of course, our actual retained earnings that were there to date. This is your beginning balance retained earnings. What was there from prior periods? Plus current period revenues minus expenses minus dividends. So here we've just extended it out to all the components of retained earnings and all the components of stockholders' equity that you might have at play at any given point in time. This particular problem, whoops, I did not spell the word revenues right. This particular problem does not have, at this current point in time, any revenues or expenses to take into account.